The collapse of the Silicon Valley Bank has sent ripples across the financial sector and especially the startup world. The bank has served over 37,000 small businesses, 2,700 venture capital firms and several cryptocurrency firms as well. What led to the collapse of this bank and what next? We will be getting you a report in just a bit, but let's go across to Gopal Srinivasan right now. Gopal Srinivasan, thank you very much for joining us. Yes, Joe Biden has stepped in. The US government has also put out a joint statement that all depositors will have access to their funds. But what kind of an impact will this have on the VC ecosystem, on startups?
Hi, Parikshit. Always good to see you. Good evening. I think too much has been analyzed in 96 hours on SVB. So I don't think I'd like to get into that particular episode because it has been overanalyzed. Here are 2-3 things that struck me very sharply about this episode. The first is the US banking system, more than 4,000 banks, more than 500 bank failures since 2008, duality of regulators. FDIC is the lender of last resort, and the Federal Reserve is a network of 12 different Federal Reserve banks with one board. I think it's high time that the US revisited their banking regulation system and made it much more aligned in today's fast-moving digital world. Should you really have 4,000 banks? If you look at the banking assets in India, nearly 70% of the banking assets in India potentially are in the top 10 banks. It's about 50 in the US. And then with a very long tail. India has less than 100 banks from whichever way you count it. So I think it's very, very important that the US should examine, and I'm sure that must be going on avidly right now. Every call to action requires a calamity, and this calamity, I'm sure, is making the US regulators rethink what should be the regulatory framework as far as banks are concerned. In India, one RBI would be both a regulator. It is also going to be the lender of last resort, and it is owned by the government, unlike the Federal Reserve, which is owned by a series of banks. So I think there are a lot of issues there for them to talk about, but that's their problem. We'll leave it to them. The second thing is, how could venture capitalists allow this kind of concentration of startup treasuries, all dedicated to one single bank? It is quite amazing that the stranglehold grip that Silicon Valley Bank had on VCs and had on the startups, whether it's because they offered venture debt, because they were a large fund of funds manager. I don't understand that fully, but there is something that has to be studied in great depth. Those would be my 2 top observations in terms of what I think we need to reflect on. The US banking regulation in today's world of the 21st century, does it make sense? And the second one is really, how did they put all their money into one bank? I mean, normally all of us, when we advise companies...
Mr. Srinivasan?
Yes, please.
Yeah, Mr. Srinivasan, we've also seen that this issue, this collapse was not limited to just one bank. There are now 3 banks which have collapsed in the recent few days. What are the lessons and what are the things that we'll have to watch out for? What will investors, what will companies have to do in order to ring-fence themselves, protect themselves?
So, Parikshit, as we discussed earlier on when we spoke, I think clearly the US has signaled that they will protect deposits. So I don't think there will be any damage. The lender of last resort will have to step in. Maybe the Fed will give money to the FDIC to back it up. That is not a concern right now for me particularly. I think the larger issue is really the regulatory mechanism. Anytime there is a sharp change in yields, right, either way, the banks will always see either a surge in their MTM profits or they will see a huge reduction in their MTM losses, which is what we saw right now, right? The kind of losses they saw reduce their capital adequacy from what, 12% effectively to 0.6% because of the MTM losses on the bonds. So this tenor mismatch that takes place is crazy. So I think they need, in India, for example, roughly you have a cap, not more than 20% can be HTM. 80% roughly needs to be MTM as far as RBI regulations is concerned. So I would say one set of issues is really RBI regulations. The second set of issues is really going to be around the whole venture debt industry. Silicon Valley Bank was a really well-run bank in every way, right? It was ranked the fifth best bank in the world, in America. It really pioneered the venture debt model. It pioneered banking to the startup system, but it obviously became so close to everybody that there was not a requisite arm's length objective assessment that was needed. So I think that venture debt market will go away. And at a time when startup funding in America is low, I would expect some serious issues as far as startups are concerned, who don't have funding and are unable to raise funding, and the venture debt industry drying up for a while.
If I were to ask you, for example, of IVCA's exposure to the SVB Bank or these three banks which have been shut down in the recent few weeks, how much would that be, and what kind of an impact do you foresee for Indian startups this year?
As I keep thinking, Parikshit, reading the FDIC notice, all these startups who have the treasury funds there will get their money. That has been assured by the FDIC and by Janet Yellen after she spoke to the president on Sunday. So there is no fallout in terms of any short-term liquidity to those startups. The longer-term issue really is related to whether they will be able to raise venture debt. But the question we are all asking, other than the regulatory mechanisms in America for the 21st century being current or not, is the startups in India who have money in SVB are those who chose to flip their domicile. Given everything that's happening in India so positively, is that really needed? I think some deep thinking by them in the future, or including reversing their domicile. After all, we see somebody like PhonePe who have reversed their domicile from Singapore to India. I hope we see more such outcomes as a result of this and come back to India, which is perhaps having a tough regulator, but a regulator that gives us ability to sleep peacefully at night, like RBI, and domicile more in India.
Right.
The government obviously has to therefore also think about sorting out many issues which it failed to sort out based on the Damodaran Committee report, which gave some excellent recommendations on making India more attractive to startups. ESOP taxation would be one such example.
Right. Okay, now speaking about the reaction of the Indian government, the Minister of State for Electronics and IT, Rajiv Chandrasekhar, has said that he will hold a meeting to assess the impact, the road ahead for India as well. How do you think the Indian government and the regulators should be responding to what's happening in the United States with these banks?
I think, like I said, short term, there is really no damage for any Indian startup because the money is going to be paid. That's the word given by the US government, and the US government is all probably as better at its word than many other countries. That is really not a worry. What we should sit and think carefully with Minister Rajiv Chandrasekhar is, why are startups domiciling abroad? What are the things we can do to make it more attractive for them to domicile in India? And mainly this is in the SaaS area. And thirdly, Indian domestic capital, a lot of recommendations have been made, both from taxation point of view and any over-regulation by SEBI of AIFs, especially for the retail investors. These are areas which require detailed examination. So if I had to do three things, I would say make startups investment in India easier, particularly on the ESOP front. Number two, make sure that the domestic regulations relating to AIFs are made simpler and easier, and that funds have more flexibility to operate rather than only seek foreign capital and go to IFSC. And number three, examine carefully what is it we need to do with startup listing. There is some fear that long-term listing of startups may be more difficult in India. I don't think so. Actually, startup listing in India is an attractive feature and we should publicize it more. So these are three areas that I think the minister should examine. Right. The Silicon Valley Bank collapse is behind us.
Okay. We'll have to leave it there. But Mr. Gopal Srinivasan, thank you very much for joining us here on News Center, telling us about your take on the SVB bank collapse and how Indian regulators and the government should take note of what's happening. We're going to take a short break, but coming up, India's manufacturing sector continues to see growth in FY23 with some temporary effect of global slowdown, according to FICCI's manufacturing survey. A discussion with FICCI President Shubhrakant Panda when we're back.